We'll start with where we left off. So we all remember that we're doing like B to the upside, and that we're seeing a weaker dollar would mean that we're going to be doing a new higher high. Towards the end of the week, we are going to be seeing this week, of course, we're going to be seeing several releases that could weaken the dollar further. We're going to be seeing inflation numbers out of the PCE, personal consumption expenses. The price index could fall lower. Even consumption itself could fall lower. And we are also going to be seeing Michigan sentiment towards the end of the week. And the gross domestic product out of the United States is already negative. All these would mean a weaker dollar and stronger gold. If you're seeing a stronger gold, you expect that B to actually equate not only with 3,400, this is a double head, can actually equate with 3,500. I believe that was the old market top, barely showing here. So still $100 higher. Today we are $150 from the market top. We are $170 from the market top. 3,350, I believe, around that level, or 30. So the fact that we are unable to break lower out of what is perceived to be a wedge means that we probably have the labels not very correct. We have an A here, we have a B here, we have a C here. This is a 5-wave swing going all the way to attack the market top. 3,500, 3,600 is actually our target. So like I can drag that A here, that A in red here, that B in red here, that C is finished. I'm not going down anymore. Remember, we have bounced 3,150 and whenever fell back to test it. If this was going to be tested to give way to 2,900, we should be attacking 3,100 one more time. So we're moving higher to a higher head, 3,485, 3,600. This means that this move, 1 and a 2, we're seeing a 5 swing 3, must be 5 internals. Bounce comes in at level 1, and we get another dot 5 in yellow to compose a higher head. We were looking at this since last week, 3,309. Now we are 3,320. We just want to update the labels, do the entry. The market cannot fall below level 1. We talked about this yesterday. Our best entries are always in a level 3. That is a level 3. We will, of course, update the entries when we go live. If we are already long, we hold going into the PCE. We really hold going into the PCE on Friday in particular, and of course on Thursday. On Thursday, the more, let's say, fundamental impacting markets is going to be the gross domestic product of the United States. If it's negative, will drive gold very strongly to the upside. Now, why? Because they've just Congress has just passed the law to limit, to decrease taxes, cut taxes. If you have lower production, lower gross domestic production, and you're cutting taxes, of course, some may argue that it's actually good to encourage investment and production. But if you already have lower output and you're going to lower the gross tax that you collect and you have a running deficit, of course, how are you going to manage? Right? It means the dollar is heavily leveraged, heavily indebted, and gold is undervalued in relation to a heavily indebted and heavily leveraged dollar. So it should have gain value, be more expensive in terms of dollar. So of course rises against the dollar. And that's what we perceive. So if you wish, we believe we can hold going into releases, again, gross domestic product specifically on Thursday, and inflation on Friday, and Michigan sentiment. And we're going to be seeing an attack of the market high. If we already are in, I doubt that we're in good money, but if you're not in the trade in the first place, we just buy negative momentum on the 15 and 5 minutes, segregate the internal correction, buy a reversal, hold it higher. All right, let's take it live. Positive momentum on the 1 hour, positive momentum on the 2 hours. Positive momentum on the 1, positive momentum on the 2, positive momentum on the 4. So all this shows us, of course, the strength of the move. If you're saying all the intermediate term frames positive, and we are bouncing out of the lower boundary of an ending diagonal here on this 4-hour time frame. We're going to attack the neckline, and we're going to take out the neckline and do a second head. That's all. That's higher head. So let's insert the resistance 2, 3,470, in between resistance 2 and resistance 3, where we have the green arrow, 3,525. I believe we should see this week, seriously. And this is something like $200 for count levels, quite wide range. But we have the fundamentals that can take us there, assuming we have, let's say, more negative reading for the gross domestic product, lower inflation, a combination of both. Gold will, of course, immediately correct its value. On the forward, we see a .1 and a .2, internal 1 and a 2, internal 3, 4. We are now doing a 5. Let's take this now to, we have positive momentum in the daily, take it now to smaller frames. According to what we're seeing here, we have completed 5 swings. We can see here we have a 1 and a 2, internal 1 and a 2, 3, 4 and a 5, 3, 4, and up here we have an internal 1, 2, 3, 4 and a 5, 5. So we're doing an E, we're doing a B, we're doing a C. The best entry, of course, is level 1. Level 1 is 3,250. Level 50% is 3,265. All right. So the best would be to segregate this on the 5 minutes, segregate the current retraction. Now, if we have longs, I believe we have longs since last week. We will check momentum on the 5 and 3 minutes. If we see any negativity, we close out the longs. We're going to hedge at this level this week. We don't need to hedge at this point. Just wait for a bit of a bounce, close out the longs maybe at 3,370. You can get that today. 3,367 is showing. All right. If we don't have the longs, we'll wait for retraction down to 50% is excellent. 3,265, 38.2 possible, but 50 is more like it. It's 50% between support 1 and the pivot level on this 30-minute frame. How do we get the entry in? You want to buy negative momentum on the 5 and 50 minutes. You wait for the correction, buy negative momentum at one of these two support levels, at 61.8, at 50%. Maybe at 38.2, I don't see the fundamentals to take it there. There are no fundamentals to take us to 3,240. I really doubt. Okay, we have splatter momentum. Splatter momentum inside of a triangle configuration is a buy trigger. So just saying we're going to buy positive momentum, a negative, sorry, momentum. Yes, we're going to buy negative momentum. Because, of course, there's an ending diagonal. So we buy. What does it mean? It means that you're short-term trading oil, you're really buying top bounce out of a level 3. All right, you're taking it from one internal pivot to the next. We implement the same strategy that we were just showing with Bitcoin. If you're going to short-term trade it, if you're going to intraday trade, I'm buying level 3. Bear with us a second. So I'm buying at level 3. I'm hedging below level, not really level 1. There's an internal 1 and a 2, 3, 4, and a 5. This is a high degree 1, but I'm hedging close to high degree 1. So internal level B, I'm hedging at 3,300. I am buying, say, 3,335, around $35. I would just take it to 50% between resistance 1 and resistance and the pivot. I can also take it to, but it will take more time, so it's best that I just take it to 50%. Again, 50% here means 3,360. My entry is going to be 3,330. 3,360 is $30. The hedge is 3,300 is, of course, another $30 or $35 of risk. You would consider to do this in order to be efficient and always buy the cycle lows and create yields of maybe $30 per move or per contract per trade. Otherwise, if we buy and hold, yes, towards the end of the week, we can consider to buy and hold, meaning going into Wednesday, going into Thursday, particularly when you're getting the gross domestic product out for the United States and you're getting other fundamental releases that could weaken the dollar, you would want to buy and hold. But at the beginning of the week, it must be just a short-term target projection. The current correction is showing, of course, leg A, leg B, and leg C. Just an A, we get a B. That's why it's just 50%, and then we get a C. And we're all probably going to be getting attacks on level 3 and level 1s before Thursday or going into Wednesday, and therefore we can get better entries at support 1 or maybe between support 1 and support 2 on this 15-minute time frame today. If we are all attempting to do swing position, of course, a trigger is key. So if I wanted to take a trigger, I would consider that 5 is going to extend, dot 3 is going to extend, bounces out of a level 3. When I get traction, positive degree 3 momentum on the 5 minutes and on the 3 minutes, I'm bouncing that internal level 3. I buy market. I have a entry market. If I take out the level 3, this is of course a level 3. Like a 1 and a 2, 3, 4, and a 5. This is a level 3. If I take out a level 3 on positive degree 3 momentum on the 5 and 3 minutes, I just have a stop at 3,320. The market is a buy above a level 3, 3,346. I may consider to hold this for a projection of leg 5 into 3, 3,422, which is of course here 3,414, resistance 1 on the 30 minutes or 1 hour time frame, resistance 1 this week. Usually we prefer to position trade gold and not short-term trade it. But I'm aware many traders are now short-term trading gold because it is trending higher. So fundamentally speaking, any entry long that you take will make you money. Really, it just depends on fine-tuning it, how much money you make, where you take the entry, and if you fine-tune it correctly, of course, you're able to make more money than just any money. All right, so we'll look at. We will attempt to take a swing trade. Since last week, we were attempting to buy top of level 3. This is a trending market, so you can expect to bounce 61.8. You can expect to bounce a moving average or very close to the moving average. Once we have a trigger, meaning positive momentum on the 5 and 3 minutes, we will confirm that we have bounced out of an internal level 3. Maybe an internal level B is also possible. Once we take out an internal level 3, we're excellent. Market is trending. So if we don't even fall down to level B and take out internal level 3, we're good. We're really excellent. Excellent to take the trade, and we are seeing this. Subject, of course, that we have lower inflation, negative gross domestic product trading, and weaker PCE. Takes us to 3,470. Our entry at this point will be around 3,340. So still another $30. But the risk is very dilute because our hedge is 3,315 from 3,340, just $25. If we don't have a trigger, we are going to fall back to buy 3,265, 3,241. We can do, of course, the internals and do the projections in order to do the long. We are not, of course, having a trigger at this point. So far, maybe we'll get a trigger actually. So on the 5 minutes, it's possible we get a trigger. We'll see. Not really. Unlikely. We're not yet out of a level 3 or level A. This is an A, B, and a C, of course, so we're 3 at this point. So we don't have a trigger.